Ether has been in a huge downtrend since November 2021 and has found it difficult to sustain itself above the weekly time frame's 20-day moving average. According to many analysts, Ether already reached its bottom on June 18 at $882, a drop of 81.67% from its all-time high of $4,871 reached on the Coinbase platform, as of on November 10, 2021. Even with the continued bearishness in the cryptocurrency markets, tenacious investors who purchased ETH at $882 would still be up by 80% today. Some are wondering whether ETH will surpass $2,000. If so, how would it be possible to make as much money from this jump in value? Stay tuned to find out what we think will happen with its price in this video. Recently, ETH lost support at a crucial $1,704 level, which has since turned into resistance. Since the bears are currently in charge, there is a chance that ETH will decline to the $1,400 support area if the price trend is negative. However, there is a significant potential that ETH might rise up to $2,000, which is a resistance set in place for January 23, 2022, if the merge is a successful price catalyst and the $1,700 resistance is broken. The current consolidation pattern for ETH is a horizontal channel. The present price structure fall makes a large sum of crypto analysts think of September 7th, when the case of Ether fell to the $1,400 range before rising again to around $1,800. ETH has history of such swings like this, and many are hopeful to see if this will turn out to bring large gains for their various crypto portfolios. As we can see, there is a good probability that we will have a positive turnaround here at these lower levels, which, if the bulls are successful in seizing control, could propel the price of Ethereum back towards the $2,000 level. Additionally, the relative strength index is at 33.26, which is borderline oversold. This may indicate that dollar cost averaging would be beneficial at the current pricing levels. It would be ideal to see ETH break over the $1,600 barrier of the horizontal channel, and then retest that level before possibly continuing onto the $2,000 range. If that were to occur, then investors would pool in a huge landslide to push the prices and further up. More and more people start paying attention to the price movement of ETH as the merge approaches in just a day, and a couple hours as of the making of this video. Ether is currently valued at $1,596 and has a $195 billion market cap, according to CoinMarket. Another encouraging sign that a rebound may be imminent is the 25.18% spike in trade volume for Ether over the past 24 hours. The Ether merge has also been the subject of numerous crypto influencers' tweets, which has increased the fervor and excitement around the campaign. As anxiety over the Ether merger rises, the performance of Ether is currently incredibly erratic. Although, in this month, the volume of ETH futures surpassed 1.07 trillion. Only twice in ETH's existence has the volume of its futures contracts exceeded this amount. The volume of ETH futures has also overtaken that of Bitcoin, which reached 941 billion for the first time in the history of the cryptocurrency market. The performance of Ether and Bitcoin in the spot markets has also demonstrated that there is currently more fervor in the ETH market. Currently, the spot price of ETH has increased 5.21% and is just about over $1,700 per day. BTC, in contrast, has grown by 3.67% during the same time period. The anticipation of the merging upgrade expected for later this September has been linked to ETH performance. According to past trends, one of the worst months for high-risk investments like cryptocurrencies is September. On the plus side, October, November, and December are typically considerably more rewarding and healthier looking. Ether should be able to recapture the $2,000 price levels with adequate bullish momentum and community morale. However, because the cryptocurrency market is still in a winter, failures at resistance levels are inevitable. For the rest of 2022, we predict that the price of ETH will fluctuate between $1,250 and $2,000. No matter what happens, it will be a wild ride for sure. This brings us to our next topic at hand: NFTs and how their popularity has shifted throughout the past couple of recent weeks. Many are wondering if NFTs are for real, and if so, can they be assessed as an asset class? Investors can protect NFTs as they become valuable. The reason for this is because NFTs have received so much attention and news stories regarding advancements in its ecosystem. After all, the primary source of interest in this new asset class has thus far been its value alone, rather than the reasons for its high price. Numbers provide context for the narrative, which explains why many people have a fascination with tracking the highs and lows of the NFT market in terms of dollars. The price has received far too much attention and news stories regarding advancements in the non-fungible token ecosystem. After all, the primary source of interest in this new asset class has thus far been its value alone, rather than the reasons for its high price. Numbers provide context for the narrative, which explains why many people have a fascination with tracking the highs and lows of the NFT market in terms of dollars. In news articles on developments in the non-fungible token ecosystem, the price has gotten far too much attention. After all, rather than the causes for its high price, the value of this new asset class has so far been the main source of attention. The narrative is contextualized by numbers, which explains why many people find it fascinating to follow the dollar highs and lows of the NFT market. The fact that these NFTs provide the bearer with tangible value outside of their crypto wallets alone is what makes them so appealing to non-cryptocurrency enthusiasts. In other circumstances, the value may arise from the privileged lifestyle and networking opportunities made possible by NFT ownership. Others find interest in the NFT's affiliation with well-known, conventional luxury companies. NFTs are a societal experiment in terms of prospective applications, just like when the now ubiquitous QR codes originally arose. Although the financial infrastructure has not yet been established, it is plausible to see real-world assets like wine collections or club memberships being linked to NFTs and traded as digital assets. A fantastic illustration of an NFT initiative with one foot in the virtual and the other in the real world is Connect. As the name suggests, its appeal is focused on people who are passionate about social networking, more so than the token value of what they're holding in their crypto wallets, earning admission to exclusive events and the freshest, most on-brand tangible designer products. Connect members can benefit from their NFTs in other ways, such as lifestyle rewards and product offers, in addition to receiving special invitations only available to token holders, such as to VIP events held at some of the world's hottest locations. For instance, users who receive Connect Card NFTs at random can exchange them for designer goods like jewelry and high-end clothing. Members can also purchase NFTs, which grant unique access to services, rewards programs, and product discounts provided by participating brands and Connect's key partners, such as the premium retailer Shilla Duty Free. NFTIF, a collection created as a result of a collaboration between CryptoPunks, is another illustration of the effective crossover of NFTs between the real and digital worlds. NFTIF shows how digital art might be more widely distributed to the general public rather than being restricted to crypto natives. 250 NFTIFs were distributed by CryptoPunks, entitling purchasers to both a digital copy of the artwork and an actual physical pendant made of 18-karat gold and gemstones. These limited edition jewelry pieces, which combine premium goods, elite worldwide branding, and Web3 technology, are guaranteed to become some of the trendiest fashion items given that only 250 NFTs have ever been produced. Naturally, consumers rush to purchase these NFTIFs, illustrating their insatiable need for NFT initiatives that link coveted real-world luxury goods to digital assets. The project's fundamental idea, converting a digital work of art into a real one, has endless potential. Creators are paying attention since this might be a winning recipe for the NFT image collections of the future. Connect and NFTIF demonstrate that NFTs will become more popular outside of crypto-native communities as they become more integrated into consumer experiences, whether in fashion, leisure, or exclusive communities. Increased institutional risk comes along with expanding mainstream interest. High-profile incidents like the 2022 OpenSea phishing attacks, in which priceless NFTs were stolen, including Bored Ape tokens, show that those with little experience in digital asset custody need to put systems in place to protect their NFTs when using, trading, and storing them for their specific use cases. An independent and regulated custody service, like Cactus Custody from Matrixport, might be one such safety net. Moreover, this service provides cold storage options in safe bank-grade vaults that are physically isolated from the internet. NFTs held in Cactus Custody's warm storage can be traded on NFT exchanges linked through MetaMask Institutional, one of the most secure decentralized wallets and crypto gateways in use by the sector. Users are safeguarded from dishonest individuals and scam websites that lurk within the NFT ecosystem, which also submits all partner marketplaces, chains, and protocols to stringent approval criteria before allowing them to communicate with wallets on the platform. If the current wave of lifestyle-focused NFT projects is luring you to invest in them for the first time, utilize a safe source wallet to make sure you have a secure and reliable market in which to buy and sell. We hope you have enjoyed this video on current state of affairs regarding crypto and the metaverse. Do you think there are any other ways to generate income with NFT projects that we missed? Let us know in the comments below. As always, thanks for watching. See you soon.